Now, volatility is the name of the game when it comes to trading Bitcoin, and regulatory developments have whipsawed the cryptocurrency as of late. Bitcoin surged past the $1,600 mark for the first time this week, only to drop below $1,500 less than a day later. The volatility comes ahead of a decision by U.S. financial regulators on whether to reverse an earlier ruling that rejected an exchange-traded fund for Bitcoin. ARK Invest blockchain analyst Chris Burnisk joins us for a look at the future of Bitcoin and similar cryptocurrencies. He's here in studio. Nice to see you, Chris.
Thanks for having me, Mark.
So we were talking off air. The SEC in March rejected the Winklevoss brothers, and we got to know them as they were characterized in the movie Social Network. But so they were rejected. So is the SEC actually seriously considering it again, just because of the what's happened after that rejection?
This is really a matter of due course. So BATS Exchange, where this ETF was going to be listed, appealed the decision by the SEC, the decision that was made on March 10th. And so this is the SEC opening up for comment again. Actually, after the original rejection of the Winklevoss ETF, another ETF by SolidX was similarly rejected. So we see the SEC, mulling over this, but not ready to make a positive decision on this yet.
So we mentioned how Bitcoin hit a record high this week. Can you give us a sense of the growth, and not just Bitcoin, but cryptocurrencies or crypto assets, as you like to call them? Because there's more than Bitcoin out there, of course.
Oh, there's definitely more than Bitcoin. So Bitcoin is really the mother of crypto assets. Bitcoin is what brought blockchain technology to the world, because the blockchain is what is used to keep track of Bitcoin and transfer it globally around the world. And so with Bitcoin right now, if you think about it in terms of supply and demand, right? So Bitcoin's supply is mathematically metered. It's currently inflating around 4% annually in terms of supply, but that gets cut in half every 4 years. So in 2020, that'll cut to 2%. In 2024, it'll cut to 1%, and so on and so forth. That means that Bitcoin actually converges upon a fixed supply of 21 million units. So you've got a disinflationary going on a deflationary currency. Meanwhile, on the demand side, you've got, when you think of a currency, store of value and means of exchange and unit of account. So store of value, you think of people using Bitcoin as gold 2.0 or digital gold, right? In the face of macroeconomic shocks like Brexit or Grexit or the surprise Trump election. You've got ARK holding it, right, as an institutional manager. We put it in our ETFs, again, as an investment, as a store of value.
Mm-hmm.
On the means of exchange side of things, you've got companies using it for remittances, and you've got some of those volumes growing 5 to 10-fold year over year, simply because Bitcoin is really good at moving money across borders.
Tell us about Ethereum.
Mm-hmm.
Is this similar to Bitcoin? Is it different? And is it the next big thing?
I think of Ethereum as a crypto commodity. So you mentioned the term crypto assets, which is how I like to think of the asset class as a whole. So you've got crypto assets, you've got cryptocurrencies like Bitcoin and a few others. You've then got Ethereum as a crypto commodity. And when I say that, I mean that in terms of Ethereum provides access to a decentralized world computer. So just as oil is a physical commodity, compute power is a digital commodity, or in this case, a crypto commodity, because it's secured by public-private key cryptography.
Okay.
And so Ethereum right now stores about $8 billion in value. It's increased in value almost an order of magnitude this year alone. So definitely hot markets, something that people need to do proper due diligence on, but it is certainly an exciting space.
And lastly, anybody who follows the markets knows about IPOs. You want to talk about ICOs.
Mm-hmm.
What are they exactly?
So commonly referred to as initial coin offerings, I prefer to call them initial crypto asset offerings, still holds the term ICO. But this is really the idea of crowdfunding brought to these crypto assets. So you are raising funds in a distributed manner to create these digital resources. So things like decentralized compute power or decentralized storage or decentralized currency. And the space is vast. I'm actually writing a book on it, which we'll be publishing with McGraw-Hill in October.
Great.
And so we'll be going deep into this land of crypto assets.